or Sol is doing his business elsewhere because of the pandemic. He has a trading booth, looking to welcome him back on the CME Group trading floor after the rules are relaxed based on the pandemic and everybody starts getting their shots. Hopefully that'll happen. I'm trying to get my shot today. Right now it is Monday, March 1st, 2021. It is 9:15, 9:16 in the morning. It is a Monday. Everything we do here is for educational purposes only. Nothing is to be taken as direct trading advice. You're trading between you and your broker at your own risk. This is an educational service and an educational service only. There's a number of tiers to this opportunity. Once you come in as a guest, you have the opportunity to sign up and be part of Sol's monthly. And if you have an interest in that, raise your hand. I'll be glad to send you out the information. If you're coming in on the outside, join us on the inside. Look for the link. Look for the link. It's pitiq.tv. pitiq.tv. Jay, I'll send it out to you now. It's a limited opportunity. You'll see what I mean when you get it. So look to take advantage of it. And then I authorize you in the background for the discount. The focus here is the S&P 500 E-mini. The focus here is learning how to scalp the S&P 500 E-mini, either as a serious hobby or a living. Starts out with setting up a S&P 500 E-mini chart. If you need charts, let us know. If you need an account, let us know. We can turn you on to some of the people that will give you information, get you set up so you can trade against real-time data. And you're looking for an account that has the ability to do decent order entry, has real-time data when it comes to speed data, if you will. So you want to make sure that you have an account that you can trade fast on, be able to manage the order entry so you can protect your downside, and you can put in orders the way you want to based on your trading education and based on what happens here. So some of the advantages to being here on a daily basis, one is Sol's zones that he gives out on a daily basis. These are the zones that he uses in his own trading. These are the zones that he is looking at as areas to do trades. The way Sol sets himself up to do trades in and around those areas, the component is price action trading. It's a trading methodology and an opportunity for you to learn. That trading methodology is part of this service opportunity. So the first thing you do is you come in as a guest, you transition into a monthly, which gives you access to Sol during the morning session. Right now, we're coming up on the start of the morning session. It is 9:19 a.m. 9:30-ish, Sol sets his levels for his own trading, his zones. He gives them out an audio to everybody as representative areas that he's looking at. Then we have the morning session. You can interact with Sol, ask questions. You can relate to his zones and his areas. He loves questions. Don't hesitate to ask him. Interact with him utilizing the chat feature in Zoom. And the next level of service is you have the opportunity as a member of the family when you sign up for his monthly to talk about the opportunity to do an intensive with Sol, where he takes you under his wing, teaches you his price action trading methodology, how to set those areas or zones. and then works with you based on the entries, exits, and stops in and around those areas or zones. And that's the opportunity to learn how to develop price action trading skills, apply those skills, and work on developing consistent profitability based on the price action trading methodology and Sol's scalping or trading intraday zones. So that's what we do here every day. That's the opportunity that presents itself here. It's very personalized. Very important for you to know that. Hey, Tim, Warren, welcome. Hey, Roop, Robert B, Robert C. Hey, Peter O. Hey, Padro. Hey, Mark, Kurt, KG, Joel. That's very interesting. Hey, Joel. Hey, Ann, Dove. Hey, Don. How are you? Texas Don. Hey, Casey. Good morning. Biger. Hey, Ben. Hey, so JB, how do I answer that? So I think trading is pretty expensive when it comes to all the machinations around trading. The discount that I gave, or we give, or Sol gives, is a pretty good discount off the $379 a month. It really depends on what your goal is. Um, so we're looking for. So let me just go over what the trades would be, so that it sort of breaks it down. There's really no. Well, what does it all lead to? I don't know. But Sol has a minimum. He's looking for a minimum trading profit on each trade of 2 points plus. That's a minimum profit on each trade of 2 points plus. He's looking to have a 2 point stop generally. And he's looking to chip when it comes to making money based on his trades and not let it run too much where it may reverse on you. And then it becomes a matter of contract size. So there really is no, it's a game of consistency and developing consistent profitability, but there's really no home run, scenario. It's more of a chip set. It's like the short game in golf. If you can master the short game in golf, you've got a pretty good shot of being able to play golf okay, on a consistent basis. But unless you master the short game, it's a tough situation. Now I guess the other point is if you learn how to drive, you can get close, that type of thing. But that's not. I'm just trying to relate it to what the opportunities are when it comes to the offerings. So it's $25 a week, based on the discount, but it's up to everybody to decide what they're looking for, and we can certainly describe it and present it. As far as deliverables in this service, this is for individuals that are new to trading, that really want to get set off on the right foot, and they need direction, and they also need to understand what to focus on and sort of what to leave behind. And standardized software is not, in my opinion, it's a false friend because it gives you so much and a lot of it is really lagging. It's not the future, it's what happened before the moment in time based on the opportunity to trade. An experienced trader looking for better areas or zones, as Sol has been calling them lately. These are his trading areas that he has learned to develop over the last 25 years or so. He believes it gives him an advantage over other traders. Hey, Maureen, good morning. It gives him an advantage over other traders, so that's part of the deliverable here. Sol's commentary and demeanor and professionalism is the second deliverable, based on this service. So the focus is on zones, price action trading, and the ability to develop, um, based on price action trading, consistent profitability based on small price movements. In this case, we're looking at 2 points plus. So that's really what happens here on a daily basis and why people come in and why they stay. The opportunity to be part of Sol's Intensive is another thing, which is where he takes you under his wing and personally teaches you and mentors you to work on the entries, exits, and stops in and around his key levels or his the levels he's going to give out. So let's just go through the TikToks so everybody knows. Right now it's 9:26 a.m. on Monday, March 1st, 2021. Everything we do is for educational purposes only. Nothing is to be taken as direct trading advice. You're trading between you and your broker with your own account at your own risk. You're going to receive a number of receivables, based on this service and the opportunity to sign up for the monthly. The first thing Sol's going to do is give you out key areas or zones when he pops in. He's going to take over from my voice. Write these levels down. It starts out with a pivot and other levels on top and the bottom of the pivot. And then you go through the morning session. It becomes very clear, what the opportunity is from that situation.
Good morning, everyone. Can everybody hear me all right? All right, fantastic. Let's give you our levels for this morning and see where the market takes us. It's March 1st. Days just keep chugging along here. We actually see grass underneath the snow in Chicago. That's pretty good. We've accomplished a lot in the last 3 days of weather above 32 degrees. It's amazing. All right, let's give you our levels for this morning. Our pivot this morning is 38.54. 38.54, resistance above at 59, 69, 79, 88, 97. Support below at 46, 39, 31, 22, and 13. Pivot 54, support 46, 39, 31, 22, and 13. Resistance at 59, 69, 79, 88, and 97. All right. How you doing there, JB? I think all you have to do is talk to Brad, who was just on a little bit before about the if you're interested in what we're trying to do here. We give out our levels here as part of our guide to the day. These are like initial opportunities for us to find opportunities to trade, to find setups that we might get ourselves involved in. We also use price action opportunities that the market creates based on the building out of some bars, 5-minute bars here as the market opens up and creates opportunity using the price action that the market creates, and we add those to our setups as well. So given the fact that we have these levels and then price action opportunities, we incorporate both ideas into a methodology that allows us to scalp the market, because we don't believe markets go straight up or straight down. Consequently, we're trying to get to get about 2 to 3 points on our trades, given the volatility and the volume on that on any given day. As the market opens up here, kind of running through our 59 here, which makes sense. I mean, we don't want to take the level right on the opening, if only if you're aggressive, if you're taking it. So we don't believe markets go straight up or straight down. Consequently, we're looking for opportunities to scalp the market. Like I said, 2 to 3 points with the same amount of stops, 2 to 3 point stops as well. And I mean, that's on a normal volume day. You saw on Friday that we had to increase our stops a little bit because the volatility and the volume got infused into the market. And again, that happened because the market we got a little bit busy, and things got there was more volume and volatility that was injected into the markets. Consequently, that's always changing. 2 or 3 points is the beginning point, and then we have to see what the market is going to give us on any particular day, and then consequently adjust our stops to that particular time. So so between the levels that we give out plus the price action opportunities that incur allows us to have opportunities to trade and to look for entry points and setups that allow us to scalp the market. Like I said, 2 to 3 points initially. And we're here every day. We used to be on the floor of the exchange, but now due to obviously the COVID situation, that's not doable. And honestly, I don't know if they're going to even attempt to open it up again. Maybe they will, maybe they won't. Who knows? They're not losing any volume, that's for sure. So obviously, if you don't have the extra expense, which is what the bottom line these people are always thinking about now, so that might be a interesting concept and idea that might not happen again. Who knows? We never know. If you look at the chat box area, you're going to see the levels printed out for you. These are the levels that we've given out early this morning. The market opened up here, and we use those as a guide, like I said, for trades, for opportunities, for setups. In addition to those, we also have price action trades that occur. Again, every day is different. This is the beauty of trading. We never know when we're going to be busy. We never know when we're going to get opportunity. And we have to take each day as it comes and participate with it and accept the fact that sometimes we're going to get we look for about 4 to 5 trades in the course of a day. You saw last week we were busy last week. I think probably averaged 7, 8. That's a lot. On an average for a day last week. That was a lot of trading last week. We were very busy. Doesn't mean we're going to be busy today or this week. I don't know. Who knows, right? We just don't know. All we know is we are. You get in front of your computer. You've got an idea. You have. We give you some levels, and you kind of. We're at the mercy of what the market's going to do. Basically, is what the deal is, right? We're always at the mercy of the market. And given that we've been around here a while, we know that sometimes we're going to be very busy and sometimes we're going to be very slow. And maybe sometimes in the middle. Who knows? We also focus in more on the morning hours. Those are the things that keep us entertained. We feel that there's good ebbs and flows during the morning hours versus the late afternoon hours as we kind of wait for the market to kind of give us an opportunity, slowly inches up here. We got our first level of resistance. Well, now second level of resistance is up here at the 69 area. As we kind of, just before we opened up here, we kind of ran through that 59 area. So obviously we didn't do anything there. So we're on the highs here. We're looking at the 69 areas, some level of resistance. And if anybody has any questions, please feel free to jot them down in the chat box area. We like questions, especially some of the new folks who are here who want to understand what we're trying to do to see if we can help you. We have our everyday entry price to our room, which is just a trading room, which we can share ideas and concepts. And then we have our education package, where we are showing you what we're trying to do, how we're trying to do this, and the goal of the education course is to be able to find levels on your own, find price action opportunities on your own, and to recognize those trades, and then eventually execute those trades independently of myself, as we have a nice rotation here off of our 69 area, got up to 68 and a quarter. Again, we scale into a position. So I think we've been trying to do it a half a point above and below, but I think the markets have been telling us lately that we should do it at least a point above and below. As a nice rotation here off of the 68 area. Again, we're not going to be perfect. I mean, nobody ever is. So we scale into a position, and depending on how many contracts you're trading, obviously, if you're trading one, you're not scaling. You're just trying to find the one level, one entry point area. And using that, if you are just trading one lot and using the 69, obviously that did not get filled. But if you are scaling in and you got in there at 68, you're getting a nice quick rotation off of that level. So again, it was a nice little trade there if you did manage to get in. And now everybody's a little bit different, right? Everybody's got different risk tolerances. So not everybody was able to enter at 68. Some are, some aren't. And again, if you didn't, if you missed it, that's fine. Make a little bit of an adjustment on your entry point there if you missed it. Maybe increase it, go up to 70, 71 area. And I only say that because most of our levels have backups behind them. And that means that even though the level is there's a secondary resistance area right around it. So that's why we tell you to adjust if you missed it, or some other traders who are more risk averse will cancel that order altogether and wait for the next level on the upside is at 79. Downside support right now would be around our pivot area there at 54. That's where we are looking for some support on the downside right now for the time being. Market is being influenced a lot these days by the talk of interest rates, as the market is being a little bit worried about rising rates and what that could do to this forestalling any economic growth. The Fed has calmly and consistently calmed everybody down, especially Powell, who's come out and continues to tell everybody everything is okay. Everything's okay. Everything's okay. Today's probably no exception, as there is a slew of there's a couple. Well, there's a slew. There's a couple Fed speaks this morning at 9 o'clock. Actually 8 o'clock. So it already happened. And then later on today at 1 o'clock this afternoon. We do have a couple numbers coming out here. We have at 8:45, which is in about 6 minutes or so. We have PMI manufacturing index. And then at 9 o'clock, top of the hour in about 20 minutes, we have ISM manufacturing index and construction spending. So we have a couple numbers here. Fundamentals. They're going to be released into the market. We don't like to trade when numbers are released, or at least we don't like to have a position on. When numbers are released, we never know how numbers react or how the market reacts to numbers. So we try to keep ourselves flat when those opportunities or those numbers are released. So we have, like I said, number here at in about 4.5 minutes or so. So again, and then a couple numbers at the top of the hour. PMI manufacturing index could be a market move, or ISM manufacturing index could also be a market move. Both of those could be little market movers, and both of those will be you know, try to stay a little bit flat here. So nice rotation there against the 69 area. Again, we're trying to find these inflection points. Will give us an opportunity to scalp the market. 2 to 3 points right now seems like a doable number. Again, when volatility gets injected into the market, we're probably looking more at 4 or 5 or even 6 or 7, depending on how quickly things are moving. No, I understand there, JB. I totally get it. Like I said, Brad will, if you give us your telephone number, Brad will be able to call you and give you all that information. It's not a, you know, it's not a crazy, you know, number that people can't afford. Let's put it that way. If you're trading, and my philosophy on education is this. I mean, if you want to become a surgeon, you're not going to just, somebody's not going to give you a scalpel and you're going to go run in there and start cutting up people, right? You have to learn a little bit. Same with trading. I mean, you know, people want to trade, but, you know, we have to be willing to and get a little bit of understanding of what markets are doing, why they're doing it. And that's what I'm here to try to do, a little bit of explaining and helping. So if any of this stuff interests you, again, it's not an outrageous amount. It just pays for you know, the time that we put into it and everything like that. And look, if you get to ask questions of me, we work together. I get to find out more about you and how we can maximize your profits, depending on your risk tolerance and what you could do to you know, where your issues are. We're trying to work on those, a little psychology part of it. So it's a whole bunch of stuff that was included into that. All right. Again, so some of the new folks that are entering here, if you're looking at the chat box area, we're going to print up the levels that we've given out. Those are kind of a guide to the day, and nothing's etched in stone here. So those are we adjust those according to the price action and volatility. And right now, the 69 area, depending on how you entered, could have been triggered or not. If you didn't get it, then maybe make a little bit of adjustment to the upside. Maybe, like I said, 70 or 71. If you did take it, and then you know you did all right with it because you got a nice rotation there. If you got in at 68, again, we scale into a position, into an area. It's always an area, right? It's not just perfect. I wish we could tell you we were perfect, but we're not perfect. So we have to adjust to not being perfect, and by doing that, we like to scale into a position to help with the unperfectness that we are. All right. So we do have a number coming out here in about a minute, though. So if you're thinking about putting on a trade right up here when it comes up to this level, again, be mindful of the fact that there is a number. We don't like to trade numbers. We like to be flat when numbers come out. So, you know, it is what it is. As you can see, we got right up to 69 and bounced off a little, but again, the number is going to be really small momentarily here right now. As you can see, it's adding a little bit of, it's kind of absorbing the number, kind of testing the 69. Obviously, like I said, it's probably a good area. And if you didn't want to take it, if you're going to get in a little bit higher, then you can maybe get in now. If not, you want to wait for the 79 above. That's definitely an alternative. but we definitely don't like to trade around the number. There's always going to be opportunities after a number is released for us to get involved in. So it's all a matter of individual risk tolerance more than anything else. Remember, you know, everybody's got different risk tolerances, what you're looking at, how you want to trade, how you don't want to trade. Those are all part of what our program is, so that we can try to maximize your profits in trading. I try to adjust your risk tolerances to market conditions, so that you can find a way to know when to cancel, when to enter, when to adjust. Those are all opportunities there that you have to think about. All right, so if you did adjust 71, 72 area, we did get up to 71 and a nice rotation off of that. Well, Robert, see, I think you might take the rest of the day off here. So if you did jump in there, you're doing okay. Again, some of the new folks, welcome. Here we are going to imprint the levels right now for us in the chat box area. There they are. Those are levels that we use as a guide for the day. Again, we make adjustments to those levels like we just did here with the 69 area. We suggested maybe get it up to 71, 72. They get right up to almost 72 there, and a nice rotation off of that adjusted resistance level. And again, we do it for a reason. Anything we do here, any kind of opportunities that we talk about, that I suggest there's a thought, there's a reason that it's happening. It's not just, I don't make things up. And hopefully you understand those reasons, and then try to use those to find those opportunities on your own. The goal here for our education course is to be able to find reasons to trade and independent of myself, because I'm just kind of here to kind of guide you along in the morning. But as the day goes on, we focus more in the morning hours. So as the day goes on, you're going to have opportunities to trade, but we focus more for us to we get good ebbs and flows that way. And so we're looking for the first couple hours in the morning, 2 to 3 hours, to help us with the opportunities to find these trades. The rest of the day comes along, and it is tradable, obviously. I mean, I'm not telling you not to trade. I'm just saying that I think for what we do and how we trade, the first couple hours is very intense, and we get good ebbs and flows. The market kind of does the things that we expect it to do. The afternoon trade becomes a little less. The volume gets a little sucked out of it, depending on the day, and those are going to. You have to be able to understand that those days are going to happen, and those afternoons are going to happen. But most of our good trades, the ones that we focus in on, occur in the morning hours, and that's okay. So if you've got you trade in the morning, you got something else to do in the afternoon. If you have other businesses or you have a different job or whatever, it gives you an opportunity to trade in the morning and do whatever you have to do in the afternoon. That's what we kind of focus in on. All right, we have a nice rotation there off of our adjusted level. Like, again, we adjusted it to, I gave you the reasons why. Every time we put on a trade, there's a reason why we put on a trade. There's a reason why we look for a level. I kind of explained them to you already. And all these reasons, like I said, we try to want you to be able to understand them and then make those adjustments accordingly for yourself. All right, let's see what we can talk about here. Remember, the market's been concerned about the interest rate situation. All right, for basketball analogy, which sectors will make it to the Final Four? That's a question investors are asking as the new month kicks off. After things turned south for stocks at the end of February, the biggest monthly rise in bond yields since 2016 injected fresh uncertainty into the market, bruising technology stocks, triggering volatility streaks that saw the Dow swing more than 1,000 points over 3 days. Things appear to be turning around this morning as yields fell a little bit, and the Dow is up. Oh, inverse trade? Huh, what a surprise. This week is key. I'm expecting turbulence or volatility to remain with us until we have a better understanding of where central banks stand, said some fund manager. Further consolidation is likely in March, but we expect stocks to find support shortly and subsequently challenge the recent highs again. So another fund manager. These guys are great. A lot of fund managers. Another area that's taken bets is the potential increase in inflation due to the recent stimulus efforts. The House passed President Biden's $1.9 trillion coronavirus relief bill on Saturday, while the Senate is expected to follow suit shortly. The package includes funding for vaccines, medical supplies, and extension of unemployment benefits, around a $1,400 stimulus checks for individuals who are making 75,000 or less, an extension of unemployment, and financial aid to small businesses and state and local governments. As a result, the U.S. Treasury is expected to sell huge amounts of debt in the coming months to pay for measures aimed at supporting that recovery. So, last week, one of the days, we saw the bond market hiccup a little bit. We talk about these auctions that are released every during the week, and those auctions, basically, that's the Fed selling bonds, and there's a bid to cover ratio on some of these opportunities, right? When the yields are high and it's attractive, you get a good bid to cover ratio. If not, things are. So we had a big hiccup in the bond market the other day. Maybe it was a mistake because they completely collapsed there for a little bit and then came all the way back. But who knows? Mistake or not, it really doesn't matter. But when we talk about the Treasury selling huge amounts of debt, so those things happen at noon Chicago time. Usually it's going to be Tuesday, Wednesday, and Thursdays. They usually are different denominations: 5s, 7s, 10s, 30s. I'll try to let you know when they're going to occur, so that in case you're trading at 12 o'clock, something could happen. It's something that hasn't usually happened lately, that what's going on in the bond market is affecting us, especially auction results. But, because of what happened last week, and because of the continued talk about interest rates over the last a month or so, we maybe should be mindful of that stuff a little bit more. As the market rotates back up here to the highs, we have support, like I said, down at 54. Obviously, we didn't get down there. Next resistance level above is the 79 area. And right in here, this is kind of tough to figure out, how far down it's going to go. You're going to wait for good support, right? At least that's what we try to do. We wait for good support. Right now, the good support is down at the 54 area. And this up here, for the time being, let it just do its thing. We had our level there where we were able to make a little bit of money against our 69 area. And so we're good. Let's see what happens now. Next level on the upside, like I said, it's 79. So even though I'm talking about fundamentals, and sometimes I'm talking about, stuff that longer term stuff that might occur, that's fine. It's not like I'm not focused in on the on what the market's doing. I just don't. This is, to me right now, just back and forth. This is a no trade zone area. I'm not, trading in this little area right here. Only if you're aggressive do you want to jump in and find little areas to trade. That's fine. And that doesn't mean that everybody's doing it. It doesn't mean that nobody's doing it. It just means that I'm not doing it. So our next level above here is 79 area. Federal Chair Powell has aligned with the administration in waving off concerns about the overheated economy, saying the jobs market has ways to go before inflation fears are justified. The support could trigger a strong period of growth, low unemployment, and rising wages. And those critics argue that it may lead to cycles of rising prices, higher interest rates, and ballooning national debt. The views don't only have investors sizing up March, but also who will be the champion at the end of 2021. As the market continues to uptick here, resistance around the 79 area. Anybody has any questions, thoughts, or ideas, comments, put them in the chat box area. I'll be able to see them there as that window is up for me, and I can get to those a little bit quicker than I can get to them if you put them in the Q&A section. So if you have any questions or want to share your thoughts or ideas, please go ahead, put them in there. And I'll share them with you, share them with everybody if I feel it's worthy. As long as it's not, family oriented, it's fine. Something that's worth discussing, that's great. But, so if you want to, that's where you would add any commentary that you might have. Again, we have a bunch of new folks here. If you look at the chat box area, we're going to give you the levels that we gave out this morning. Those are the levels that we use as a guide for us to trade against. And again, we make adjustments to those levels like we did right here against the 69 area. And hopefully you were able to take maybe the initial area or maybe the adjusted area, who knows. Again, if you need to know what they are, let me know. Traders this morning are applauding the FDA approval of Johnson & Johnson's COVID-19 shot, which was the third shot to be approved in the United States. It's also the first to have a single dose regimen, a key tool to accelerating the vaccine drive. The decision clears the way for an immediate distribution and vaccination of Americans 18 and older, building on the broader rollout that's currently utilizing shots from Pfizer and from Moderna. Bigger picture, shipments of Johnson & Johnson will be limited at first. We just saw, I think it was 9 million shots go out immediately, but the company has a deal to supply 100 million doses by the end of June. The single shot product had an overall efficiency rate of 65% in phase 3 clinical trials, and the United States arm of trials showed that the efficiency rate is 72 to 85% when protecting against severe and critical disease. The lower efficiency rate compared to the rivals is rising concerns that some people may opt to wait for the other vaccines, but shares of Johnson & Johnson are up pre-market this morning. Be careful when you try to parse the percentages, the percent versus that. Fauci said, meet the press, they're not compared head to head. They're compared under different circumstances, and all three of them are quite good, and people should take the one that's most available to them. On Saturday night, 49, almost 15 million people across, something's going on. All right, there's a number now. We have that second number that's out now. So the 9 o'clock number. That's why the market kind of hiccuped there a little bit. And you can always tell if you Watch the ladder ticket. They sucked out all the bids and the offers from the ladder ticket. It's always a sign that there's an imminent number coming out, right? I might have forgot to remind you, but again, we were in the middle of nowhere. Like I said, no, and this is no trade zone area over here, so I got my 79 in there, but I don't have anything else. I got my 54 on the downside, but that's about it. So the market kind of hiccuped there a little bit, but only got up to 74 and change. Came back down. If you are 74 trader, doing okay. All right. All right. Right now we've got support right around the 859 area. So 50 million Americans across the United States, 15% of the population have received the first coronavirus vaccine, while 25 million people, or 7.5%, had received 2 doses, according to the CDC. Johnson & Johnson has said it plans to ship the vaccine, which contains 5 doses per vial at 36 to 46 degrees Fahrenheit. That compares to the ultra cold freezers that are needed to Pfizer vaccine, which is minus 112. Eesh, that's cold. Moderna is only 13 below. Whoa. Okay. All right. Well, hopefully, I would think within the next month or so that mostly everybody should be able to find access to a vaccine if that's what you are into, or if you are looking for one, I should say. Obviously, not everybody is on the vaccine trail here, but you never know. You had 80. Okay, so again, we have the 79 area there. It got right up to 78 and a quarter here. So again, if you made the little adjustment, again, depending on how you scaled in, right? That's important. And we're still trading on the back of the heels of this number. So if you did get in there at I got in there at 678. You got a nice little quick rotation. If you're waiting, again, we're still in the same bar, so you can still keep the 79 in there. But if you did take the 78, you got a nice little quick rotation off of it. Again, we're looking for these inflection points that give us an opportunity to scalp the market. During the course of the day, we could be looking at, and again, depending on how aggressive somebody is, you're looking at maybe 4 to 5 trades during the course of the day on average. Like I said, last week we were averaging well above that. And there are plenty of times when things slow down that we're averaging, 2 or 3. But again, it makes, last week makes up for a lot of things. Again, like I said, if we're still on the same bar, so if you still have a 79, I get it. Whipping around here a little bit, but we are bouncing off of our 79 area. I've been a pretty good morning, I think, so far. I think we've seen some of our levels how they work. We haven't had any market hasn't rotated to the downside there to help us with getting long anywhere. I mean, you have to be a little aggressive to find some of these areas that maybe you got in. If you were a little aggressive, there were a couple entry points there, but again, needed to be a little aggressive around those areas. Now we come up here to the 79. Again, if you are making an adjustment, you could. If you didn't get them the last couple times up here, you got 80 to 81 area now. Maybe if you didn't get in, I mean, times it's up there for you. Okay, if you got the 8.5, you got definitely got paid off there. Again, everybody trades, differently. Your risk tolerances are different. Everybody, there's a reason that you keep the trade. There's a reason that you exit the trade, cancel the trade, and everybody does that on their own, depending on how you want to deal with risk, with what the market is giving you. So my job is to try to explain risk to you, and in that way, you have to make that determination on your own here. All right, Maureen, good job. Good job. Well, it hasn't run away from there, so it's definitely bounced off of the 79 area here a couple times. So it's giving us, whether you got in the first time, whether you got in the second time, it's definitely giving you an opportunity to trade this level. Now, the third time, I'd be a little bit careful now. And again, anybody has any questions, please feel free to ask. If you hadn't received the levels, hopefully we can, if you look at the chat box area, levels will be imprinted in there. There they are. Those are levels we use as a guide. As you can see here, the 79 was in there. We also had the 69. The 59 didn't really work out because we weren't open yet when he got to it. So that level wasn't even a factor. Again, anybody has any questions? It's a good time to ask. We're not always in trades, right? As you can tell, I'm trying to talk, but sometimes you run out of things to say. So I need like help. So if you got any questions, good time to ask. Is there a way for me to measure the strength of the market? That's your answer. I wish I could tell you like I knew from one day to the other, whether we're going to be busy or not, or whether we're going to get some opportunities. Every day is different. This is the beauty of trading. It's not like your normal or everyday 9-to-5 situation where you go in there, you know what you're going to do every day or not. Somebody suggested the advanced decline line. You just never know. I can't tell you if it's, I seem to be tuned into it. Well, the VIX is also helpful. Somebody suggesting to it. It's true. But again, I never look at that as a guide for me to trade. Like I said, I try not to lean on anything because I don't like to have opinions when I start trading. Like if we opened up 30 S&P points higher or whatever it was, and I think we're going to continue to rally. Or I think we're going to break because we're 30, So if you come in with a mindset or any kind of preconceived notion of where the market's going, you tend to get yourself in a little bit of trouble. So my philosophy is let's not have any. Let's look at each day as it comes. Get your game plan going. We have our support and resistance levels. Then let's see what the market's going to do. The market's going to create opportunities as we trade, upside or downside. It doesn't really matter. I'd be trading days where we'd be moving around so much, and honestly, I wouldn't even know when the market was up or down for the day. I would just be trading. Because I'm trading levels, I'm trading numbers, and as long as I am trading, I would tell you, I wouldn't know sometimes if markets were up or down because I really don't care. And for those who want to like have this like idea that you want to know strength or weakness or whatever, it's just going to add to your bias for the day. So instead of having a bias, just come and trade. That's great. Look, if you're a trend trader, and that's what today it worked out perfect for you, right? Are we always going to have that trend day where it's going to be bouncing perfectly like that? I don't know, but again, I don't think about it. You were buying support levels on rotations to the downside, which there's nothing wrong with that at all, right? I just gave when I said we're going to buy the 54 area some support, I just gave a level that was safer. Doesn't mean that there wasn't any other support levels along the way as you were doing, right? You could have found tighter support levels up and down the market, but you also got in at areas that I would probably say were good logical reasons to get in, but then you also took more risk. All right. So when I'm saying the stuff verbally to the room, I'm trying to minimize the risk as much as possible. So I'm trying to give you the calls there for the less risk averse individuals. So, but what you did when you told me what you're doing, you got in at logical entry points, and again, those are for the traders who are take a little bit more risk and who want the opportunity to. Then that's fine. There's nothing wrong with that at all. And then there are traders, like I said, who are doing the same thing you did. They're finding other entry points for other reasons, and as long as you have reason, you had a reason for finding those entry points, and it's fine. And As long as you have reasons for trading, that's there's nothing wrong with that at all. But your original question, do I know when there's going to be a trend day? I just no idea. So, and again, I don't even care. I could have bought dips also, just like you did, if I was a little aggressive and I wanted to, and that's fine as long as you have a logical reason for your entry point. All right, now we continue to rally here. Next level on the upside we have is the 88 area. Again, obviously, we talked about the 79 being used. It got up there 2 or 3 times, so I wasn't going to really touch it after that. It kind of worked. Even the second rotation, it got up to it and worked very nicely. Only if you're aggressive are you going to do anything here. Otherwise, look for the 88 area above. Patience is very important. Waiting for the opportunities to trade, very important, right? So on the upside, I'll give you a couple more levels in case the market decides to really go crazy. We got 88. Here's the next level of resistance, the 97. Then above that, we've got 3906, 14, and 21. Those are the levels above the levels that I gave out earlier. 3906, 14, and then 21. All right, so we're up on the highs here. Next level of resistance we have is the 88 area. If you looked at the chat box area there, you see the extra levels that we have imprinted above the ones we originally gave out, just in case the market decides to really have fun, continue to rally. And like somebody, or I said, somebody suggested, could you have bought the market anywhere? There are different areas where you could have bought it. Absolutely. Um, uh, doesn't mean that some of our traders didn't. It just means that, again, I gave you, like I said earlier, 54, then we adjusted up to 58. Now we're adjusting up to the 66 area. And those are stronger levels, but there are obviously other levels prior to that you could have gotten into if that was your, that's what you wanted to do. And again, some people want to, some people are patient and they're waiting. Everybody's a little bit different. Doesn't mean that one person is right and the other person is wrong. It just means that you're a little different. Everybody's got different trading styles. I totally get that. Okay, continue to rally here a little bit. The resistance up here at the 88 area. All right, so again, resistance around 88. Yeah, it's 80, yeah, 88. See what it wants to do up here. The support right now, if you're aggressive, 72-ish area. Kind of in the middle here, just be patient. We've had a few nice trades this morning. Depending on how aggressive you are, if you just used our levels, you should have been able to capitalize on just a couple levels that we had here. If you a little aggressive there, maybe you bought some support areas along the way to help you kind of catch some of this rally. Either way, hopefully you were able to jump on board at some point. Obviously, hasn't been that many trades. I mean, two for sure. If you're aggressive, a few other buying opportunities. But definitely the market has, made a quick run up, and it's kind of settling down here a little bit. Again, we focus more on the morning hours to help us with our opportunities. We feel that we can get a good bang for our money those morning hours. Late morning, early afternoon trade becomes a little bit more sticky. There's not as much momentum. There's less opportunity again, but that's not always the case. It's just that's on a whole, that's what usually happens. But everything, this is futures trading, so there's nothing etched in stone here. You have to make adjustments every day to take into consideration volatility and opportunity. Sometimes you get somebody that says something in the late afternoon that creates some volatility in the market. Um, that's just the nature of the beast. We try to tell you when some Fed speaks are going to be talking, because lately that's what the market's been leaning on. And sometimes there's some geopolitical situation that might occur in the afternoon that creates some volatility. These are all opportunities in there that we have no control over, and could create or inject some volatility into the market at any given moment. So we always keep our stops in place no matter what the situation is, simply because we just never know when somebody is going to inject some volatility to the market by either saying something or some crazy thing happens around the world these days. You never know. All right, there, Timmy. Good job. The weather's turning there, Timmy. Weather's turning. We can see grass again. Now we just need to dry it up. We're just kind of hanging up here on the highs. Now, these kind of markets where these rally markets are happening, and especially late in the afternoon, well, late morning, early afternoon, where the market is not going to move around that much and just kind of slowly upticks. It doesn't really this doesn't do us too much good as far as what we're trying to do here, because we're focused more on ebbs and flows. But what happens, or tends to happen, when markets go up like this, they seem to just slowly, especially when the volume gets taken out, the afternoon trade comes in, you just have this slow rally going forward. You don't get too much of a break. You don't get ebbs and flows, and you get this like very tough trade, especially for what we're trying to do here. We want a little bit of volatility injected to the market, but every time the market seems to tend to go up, they seem to suck the volatility out of the market. And if you look at the VIX, that's usually what's the case is. The VIX usually decreases a lot when the markets tend to go up. So just a word of warning here is that we might get that, especially late afternoon, especially if we continue this slow trek to the upside. With we've been lucky, we got some ebbs and flows as we come up here again to retest this our 88 level here. Not retest, or just test the 88 level. We never got up here before. Okay, so obviously, we've been talking about scaling in, how you would scale in, point above and below, half a point above and below. These are all reasons to scale, opportunities to scale. If you were doing that, you're getting paid off here against our 87 area. Do I look at a dollar or the DAX? No, I don't. It doesn't mean that it's something that if you like to look at different ideas or lean on different things to help with direction, then you could do that. I'm just taking, what we focus in on more here is the levels and the opportunity. And I think what happens is that the other markets maybe come into play right around a certain area or level, only because they seem to gravitate to those. Now, you can get some direction from some of those other markets, but sometimes there's a disconnect. I look at more at the bond market for us to give us our opportunities. As far as inverse trade or not, I think the bond market is king, but that doesn't mean that you can't look at other markets. I mean, I have some people looking at oil. Oil goes up, we go up. Down, we go down. Something like that. Use the trade off of the gold for a bit there. Like I said, there's always different things that traders like to lean on to give you help and direction. My philosophy is just to kind of focus on what you're trying to do here, and try to find these opportunities the market will create. And if you want to use those other markets to help, and if they match up with the work that we do, then it gives you more confidence in entering your trade. So the goal here is to give you confidence in the trade, and whatever it is, if you're a directional person and you want to hold on to something as long as possible, we give you opportunities to hold on to it and tell you, well, look, if we get below a certain level or above a certain level, you don't want to be long or short, above or below those opportunities. So that's another way of looking at things. There's different ways of incorporating the work that we do into different kinds of trading methodologies that people have, especially if you're a position trader and like to hold on to things, or if you're a momentum trader and you need to find those momentum areas to get you through, or if you a trend day player. Everybody's got different ways of making money. There's not one correct way, but we try to incorporate all those different concepts and ideas so that you can maximize your profit depending on what your risk tolerances are. HD. Yeah, it just seems like lately that's what's been working. So I think that is probably something you should just, uh, you know, at least the morning, stick with that, and then in the as long as the afternoon comes along, I kind of go back to a little tighter. Especially if you made money. If you made money and you're happy with it, then just you know wait for tomorrow and then go back to the same thing, right? All right, so we have tested this 88 a couple ways. We tested at a point below, we got down to 87 and rotated off of it. And we also got up to 87 and a half and rotated off of it, depending on what you're trying to do. We're now up here at the 88 area again, trying to see if you are taking it on the upper levels here. Maybe there's logical reasons up to here to 90 if you're looking to take advantage of. But we definitely, the 88 area worked somehow, some way if you scaled in, right? Somewhere, somehow, some way you should have been able to scale in around the 88 area to give us a good solid 2 points. I mean, all our levels here, the 69, the 79, the 88, all have worked very nicely. Give us a good scalping opportunity. If you were looking to get long somewhere along the line, there's ample reasons to get long some other levels earlier. Could have been able to do that as well. Again, everybody's got different risk tolerances. I show you where those levels are, and then you have to make decisions on your own whether you want to get into those levels or not. But again, I know some of our traders who did. And as long as you have a logical reason to get into the trade, then that's fine. We always want to paint reasons to enter trades. That's the most important thing, that you're finding reasons to get into your trades. As long as you find the reasons to get into your trades, then you'll be able to justify the entry point and then justify the opportunity. And the more you find reasons to trade and the more they work for you, then the more you become more confident in your trading and your entering and your opportunities. All right, so we're up here again. If you obviously the lower end worked very nicely against the 88. Hopefully you were able to get in, and maybe if you're very aggressive, you're going to use the 90 here. But the next level above is the 97. Again, you're trying to just scalp the market. We're trying to take 2 to 3 points on our trades, and we're getting those from what the market is doing today. Next level above is the 97 area. And as long as you can make rotations off of our levels, it doesn't matter if you miss this big move, right? I mean, does it matter if you miss a move, or does it matter that you make money? Right? Sometimes you get, when I was trading and I get these like big ranges in a day, and I'm like looking back at it, oh my God, look at this big range. I should have made so much more money. Really, you just, that's not always the case. As long as you made money, it doesn't matter. We can make money in a very tight, small range, and you can make money in a, wider range. It doesn't really matter as long as you make money, and that's all that matters. But sometimes, because you're a trader and you see this big range, you're thinking, oh gosh, I should have made more money. Doesn't always work out that way. It's very hard, for instance, to stay short or long this whole move here. I mean, there are, depending on what risk you want to take, obviously it's doable. Obviously, if you have bigger stops, right, that's all. Everything's doable if you consider the risk involved. And there's nothing wrong with understanding that. As long as you are accepting the risk, then you could have bigger stops and get yourself situated so that you could take advantage of, bigger moves like this. But again, your stops have to be a lot bigger, and you're going to give up a lot of opportunity as far as the potential profits are concerned if you get stopped out because you're trying to stay long. All right, happens. But again, it's all a matter of individual risk tolerance. And that's, everybody's different. I get it. All right, we're kind of bouncing up here against the, I said we have a little resistance up here against 90. If you're aggressive, maybe you took it. If not, then just wait for 97. Support right now would be around the 72 to 74 area. You can see how our support levels have increased with the market going up, which makes sense. But again, this trade right now, very tough little trade for us. Can't tell you enough how tough this little trade is. These rally markets are tough for us because we're looking for ebbs and flows, and we don't usually get them, especially as the day goes on and the afternoon goes on and the volatility gets sucked out of the market. All right, so if you did sell the 90 area here, again, there was a little reason for it. I suggested that little reason for it. I suggested if you were looking for maybe the 90 area to maybe find a scalping opportunity, you got a nice little quick rotation there off of the 90 area. So this 88 area has worked very nicely. You got in at 87, you could have gotten an 88 and a half, 87 and a half, 88. And now you could have gotten in here at 90. These are 2-point rotations off of all of these. And again, minimal 2 points. But there's nothing wrong with taking profits and looking for the next opportunity. So you could have had 3 different little trades here in this one little area if you were aggressive. I kind of mentioned them. Remember, I cannot call out trades. It is not. It's not what we are trying to do here. We suggest trades. Okay. All right, so next level above we have is 97 area with support, right? Like I said, the 72 to 74 area. Again, we might never get that support. I'm just saying it seems like we're going to have this slow, monotonous rally to the upside. Where to get long, I'm trying to find good entry points for you to get long. I'm not just trying to tell you just get long. That's not how we work. All right. Yeah, I gotta make a phone call. I'll be back in just a few minutes here.
Hey, quick shout out to Mohammed. Hey, Mohammed, did you are you connected on Skype? I know it's not turned on, I wanted to send you Saul's cell phone number on Skype. Okay, great. I'll send it out to you now. And then you just got to schedule with Saul because sometimes he doesn't get service where he is. So you'll have to. I'll let him know, and then well, maybe he's hearing me now. Hey, JB, are you all good? Just let me know back in chat. And Judy B. Judy, let me know how you're making out. I think you signed up for Saul's monthly, but I'm not 100% sure. So just let me know back in chat. Dove, welcome to the family. Hey, Fred, I missed you before. Mark K. Hey, Mark, welcome. All right, I just texted it to you in Skype. Let me know if you got it. I'm going to ask him right now. Hey, Saul, you in the background? Robert, you got to dial that 1708 number. Who's he on the phone with? Yeah, he's available now. So, Mav, if you want to reach out to him, just ring him up now, or maybe you just rang him. Ring him on that 708 number. Okay, good. Yeah, he said he was just available now. He might have been on the phone before. Just make sure you're calling the 708 number. Hey, Judy, you back? Judy? Let me know in chat, Judy. JB, let me know if you're back. JB, use the chat feature to respond. Viger, I think you took care of your thing. Just let me know. Hey, James P. Hey, James, we're trading the S&P 500 E-mini. Trading based on a price action trading methodology. If you want to join us live in Zoom, you can do that by clicking on that pitiq.tv, pitiq.tv. I can also send out, see if I have it here, the link directly to Zoom. That's out to you now. Let me know if you got it. Well, I guess if you got it, you can just join us in Zoom. Hey, Rick, thank you. We're trading the morning session. So right now it's 10:55 a.m. The morning session starts pretty, at 9:30 Eastern time when the cash market opens, and then we go. If you go cell phone to cell phone, that might work, Mohammed. And you're talking about the subscription to Skype? Oh, I got you. Yeah, yeah, I understand that. Can you do it with just your cell phone, you think? Or your landline? Probably cell phone would be better. Hey, Mohammed, ring up the other number on Skype. You know, the one you tried before, the Market View one? Hey, Mohammed, just ring the Skype that we have. You know, I disconnected you because I thought you were calling Saul directly. Hey, yeah, I can hear you. I'm gonna try. I'm gonna try to add Saul now. See if I can do that. Yeah, I can hear you. I'm just trying to get Saul on.
All right. As you can see here, we got right up to our 97 area and a nice rotation off of that level. Again, you're scaling in. Obviously, we got up to 675 here. So then that's make basically all our levels to the upside have worked very nicely for you. Should have given you a good. This was obviously you can get taken a lot more than just 2 points on this trade here. Easily taken at least 4 or 5. And hopefully you were able to take advantage of that. If you're trying to stay short, support would be back around the 84 area, 85 area. That's where I would try to cover any shorts against this 97 area. So again, all our levels here to the upside have worked very nicely. Hopefully you were able to take advantage of some of them. With some buying opportunities there as well. Combination of both here allowed us to scalp the market. And just if you've taken our levels alone on this rotation to the upside here, if you just took 2 points on each one, you're up about 8 points on one lot. All right, so just on our levels, that doesn't include price action opportunities or anything else that might have occurred along the way here. All right, again, if you got any questions, please feel free to ask.